All right, so you wanted a deep dive on Bajaj Finance Ltd.
And that's what we're here to do.
That's exactly what we're going to do.
Give you that deep dive.
We've got reports, analyses, annual reports, like a
mountain of information to get through.
mountain of information here.
Yeah.
So for those who may need just a quick refresher.
Quick recap.
Bajaj Finance is a real major player in India's lending space.
Leading player.
They offer, a wide range of financial products. We're talking personal loans to business loans.
Everything.
And they operate in both urban and rural markets.
A one-stop shop for all your borrowing needs.
So really a one-stop shop. And today what we really want to do is we want to go beyond just that surface level. We're going to uncover the inner workings of this company.
The nitty-gritty.
What the analysts are saying.
What the experts think.
But most importantly, what you should consider when looking at their stock.
What's important for you, the investor?
So here's something that really jumped out at me from the start. Bajaj Finance started way back in 1987.
Back in the day.
Focusing solely on vehicle financing.
Interesting.
Now, they are one of the largest and most diversified
huge
NBFCs, that's non-banking financial companies, in all of India.
From financing scooters to now offering this full suite of financial services, it really speaks to their adaptability.
It's pretty remarkable.
It's a really interesting evolution to see over time.
And get this, they're listed on the BSE Sensex Nifty 50 BSE 500.
Oh yeah, they're in the big leagues now.
The major leagues of the Indian stock market.
That's not just a vanity metric to be included in those indices. It tells you the market recognizes their size, their performance, their liquidity, and all of those are factors that can impact your investment decision.
Makes sense. Now, let's delve into the numbers a little bit, shall we?
Let's do it.
Their quarterly results show a pretty impressive trend.
You're looking good.
Back in September 2021, their revenue was around 7,731 crore rupees.
Okay.
By September 2024, they're projected to hit a massive 17,090 crore rupees.
Whoa, that's a lot of growth.
I know, it's big.
However, there's one little nuance here that we need to highlight.
Okay.
While that revenue is projected to absolutely soar their financing margin, essentially the profit on each rupee lent is expected to actually decrease from 33% to 26% over that same period.
So more business, potentially.
More business.
With slimmer profits.
But slimmer profits. Yeah, so that shrinking financing margin could mean a few things.
Like what?
Perhaps they're facing increased competition and having to lower rates to attract borrowers.
Right.
It could also signal changes in their lending practices.
Interesting.
Or even broader economic factors impacting their profitability.
So it's something to really keep an eye on.
Yeah, definitely a key area for further investigation.
So a potential red flag amidst all this impressive growth.
Right.
Let's see what else our research reveals.
Okay.
Now, our sources have highlighted some key points for investors, both positive and those that warrant a closer look.
Like the good and the bad.
The good, the bad, the maybe a little ugly.
Okay.
Let's start with the good news.
Okay, I'm all ears.
Over the past 5 years, Bajaj Finance has achieved a profit growth of 29.4% KGR.
Wow, that's fantastic.
For those who maybe aren't as familiar, KGR stands for Compound Annual Growth Rate.
Right.
Which essentially measures that average year-on-year growth rate over a specific period.
Okay.
So 29.4% CAGR, that's pretty strong.
A very strong indicator of consistent financial performance, something that long-term investors, really look for and find very attractive.
Absolutely.
Yeah.
Now, for the aspects that may require a bit more scrutiny, the stock is currently trading at a significant premium compared to its book value, which could indicate overvaluation.
Okay.
Additionally, they have a relatively low interest coverage ratio.
And to unpack that a little bit for you?
Yeah, please.
The interest coverage ratio essentially measures a company's ability to cover its interest expenses from its earnings. So a low ratio suggests there could be potential strain in meeting those interest obligations.
Yeah, I could see how that would be a problem.
It could be a sign of financial risk.
Definitely something to keep an eye on.
Yeah.
And there's one more thing to add to that list.
Okay.
The potential presence of capitalized interest costs.
Right. And capitalizing interest essentially means you're adding the cost of borrowing to the value of an asset rather than expensing it immediately.
Okay.
While it's a perfectly acceptable accounting practice in certain situations, it can sometimes mask underlying profitability challenges, particularly when it's done excessively.
So we've got this kind of fascinating juxtaposition here.
Yeah.
Phenomenal growth, coupled with some potential financial vulnerabilities.
I like that juxtaposition.
It's like you're at an auction.
Okay.
This company is a shiny sports car with a powerful engine.
I'm listening.
That's the growth.
Okay.
But there are whispers about potential engine trouble.
Uh,
The risks?
Risk reward.
What would you do? Keep bidding
Hmm?
or proceed with caution?
Well, it's way too early to make a call just yet. But you've highlighted a really important point. We need to look beyond that dazzling exterior.
Right.
And delve a little deeper.
Yeah.
And luckily, we've got a treasure trove of documents.
We do.
Analyst report, investor call presentations.
It's like we're financial detectives on a mission to uncover the truth
Exactly.
about Bajaj Finance.
We're going to see if we can get a better look under the hood.
That's where we're headed next.
Yeah.
Let's see if these documents shed some light on how Bajaj Finance is addressing these potential concerns and whether their strategies and future projections suggest smooth sailing ahead.
I'm excited to see what we find.
Me too.
Let's do it. Okay, so let's roll up our sleeves and really dive into these documents.
We've got a lot to go through.
We do. We have annual reports, analyst reports, investor presentations.
So many reports.
Like, we're financial detectives on a mission to uncover the truth about Bajaj Finance.
I like that analogy.
And like any good detective, we need to start by examining the evidence.
Okay, so where do we even begin?
Well, annual reports are a gold mine of information.
They are massive.
They really are.
Yeah.
But they offer us a glimpse into the company's financial health, strategic direction, and how they perceive the road ahead.
It's like getting a peek inside the minds of the people running the show.
Exactly. We want to see if their narrative aligns with the numbers we've already discussed.
So are they acknowledging the shrinking financing margin?
Exactly.
Yeah.
Do they have a plan to address it?
Are they sweeping it under the rug or facing it head on?
That's what we're here to find out.
All right, let's do it.
Another crucial section to examine is the financial statements.
Okay.
These include the balance sheet, the income statement, and the cash flow statement.
The nuts and bolts of their financial health.
Exactly.
Now, I'll admit those statements can be a bit intimidating for the average person.
Yeah, they can be a little dense.
What should listeners really focus on when they're looking at these?
Well, given that low interest coverage ratio we discussed earlier, I would be paying very close attention to their debt levels. How much debt are they carrying? What's the mix of short-term versus long-term debt? And how are they managing those interest payments?
So it's about understanding how they're using debt and whether it's a sustainable strategy?
Exactly. And don't underestimate the importance of those footnotes in financial reports.
The fine print everyone skips over.
Yeah, but they often contain critical details and clarifications that can provide some really valuable context.
Okay, so we've got the inside scoop from the company itself.
Right.
Now let's see what the analysts have to say. How should listeners approach these analyst reports?
Well, analyst reports can offer really valuable perspectives. But it's crucial to remember that they're just perspectives. They're not gospel truth.
So take them with a grain of salt.
More like a whole shaker.
Okay.
Analysts have their own biases, their own motivations. Some might be bullish on the stock, others bearish.
Right.
Some might have close ties to the company, others might be more independent.
It's like getting a second opinion from a doctor. It's always a good idea to gather multiple viewpoints before making a decision.
Absolutely. When you read an analyst's report, pay attention to their track record. Have their predictions been accurate in the past?
That's a good point.
What's their methodology? Do they present a balanced view, acknowledging both the positives and the negatives?
So it sounds like critical thinking is key here.
It really is. You can't just blindly accept their conclusions.
And focus on their reasoning, not just their final verdict.
Precisely. Why do they believe the stock is a buy or a sell? What data are they basing their analysis on? What are the key factors driving their opinion?
It's about understanding the why behind their recommendations, not just the what.
Now let's move on to those investor call presentations.
Okay.
These can be particularly insightful because they give you a direct window into how the company's management is presenting their story to the investing public.
So it's their chance to put on their best face and make a compelling case for why people should invest in Bajaj Finance.
In a sense, yes, but it's also an opportunity to hear their responses to questions from analysts and investors.
Okay.
Do they address the concerns we've been discussing? Are their explanations convincing? Do they appear transparent and accountable?
It's like reading between the lines to gauge their sincerity and confidence in their own strategy.
Precisely. And remember, these presentations are carefully crafted narratives.
Of course.
Approach them with a critical eye and look for any inconsistencies or red flags.
So we've got a lot to consider here.
We do.
Annual reports, analyst reports, investor presentations. It's almost overwhelming.
It can definitely feel that way.
It really can.
But remember, we're not trying to absorb every single detail. We're looking for those key insights that can help us understand the bigger picture.
We're searching for the signal amidst the noise.
Exactly. Start with a clear goal in mind.
Okay.
What are you hoping to learn about Bajaj Finance? And then use the information from each source to really build a comprehensive and nuanced understanding of the company.
And remember, investing isn't about finding a definitive answer or making a hasty decision.
Right.
It's about gathering information, analyzing different perspectives, and forming your own informed opinion.
Now, before we wrap up this part of our deep dive, I'm going to leave you with one final thought about these documents.
Okay, I'm listening.
Don't be afraid to dig even deeper if needed. Reach out to experts, consult additional resources, or explore other avenues of research.
It's about becoming a well-informed investor who can make confident decisions based on thorough research and analysis. Okay, so we've covered a lot of ground here in our deep dive on Bajaj Finance.
We've explored their fascinating journey from a vehicle financing company to, well, a financial powerhouse.
A powerhouse, yeah. And, of course, their prominent position in the market. And we looked at all those financials, those all-important financials.
Start with the numbers.
But as with any investment, it's not just about the shiny exterior.
Right. We also uncovered some potential areas of concern.
We did.
Remember that shrinking financing margin we talked about? And the fact that the stock is trading at a premium compared to its book value.
Right.
Those are all things you'll want to investigate a little bit further.
Definitely. And let's not forget about that low interest coverage ratio.
Right. Could signal some potential strain on their ability to meet those interest payments.
Yeah.
It's like we've given you a map and a compass.
I like that.
And now it's up to you to navigate the terrain.
To make your own decision.
And decide if Bajaj Finance is the right destination for your investment journey.
Yeah.
So as we wrap up here, what are the key takeaways you should keep in mind?
Well, firstly, Bajaj Finance has an incredibly impressive track record of growth and adaptability.
For sure.
I mean, they've clearly demonstrated a real knack for evolving with the market and capitalizing on new opportunities.
And their inclusion in those major indices like the BSE Sensex and the Nifty 50, that speaks volumes about their market standing and investor confidence.
Definitely a good sign. But remember, past performance doesn't guarantee future success.
It's exactly right. Those potential red flags we discussed, that shrinking margin, the premium valuation, the low interest coverage ratio, those warrant, well, careful consideration.
They do. Those documents that we explored, those annual reports, analyst reports, investor presentations, those are your tools for digging deeper.
They are.
So look for those clues about how Bajaj Finance is addressing those concerns.
Yeah. Are there strategies and future projections alleviating those worries, or do they maybe raise even more questions?
It's about piecing together that puzzle.
It is.
Weighing the evidence.
Weighing the evidence.
And forming your own informed opinion.
And remember, investing isn't just a one-time decision.
No.
It's an ongoing process of learning, evaluating, and adjusting your course as needed.
So true.
So as you continue your research on Bajaj Finance, here's a final thought to ponder.
I'm listening.
This company has a remarkable history of transformation and growth.
It does.
But the financial landscape is constantly shifting.
That's for sure.
Can they maintain this momentum in the face of new challenges and evolving market dynamics?
That's the question you'll need to answer for yourself.
It is, but we've given you the knowledge.
The tools.
And the tools to make that decision.
Happy investing, everyone.
Happy investing.